Hello to all participants and speakers. I wish you a good conference experience to all. I will present our study today, determining and evaluating the factors complicating hydroelectric power plant project financing today. So, since Industrial Revolution, energy is the most important need for all societies. Starting of the industrialization has triggered production, especially the electricity, has become gaining importance. When we came to late 19th century, the first hydropower plant was built. After that, hydroelectric energy became the most important energy type, being the first renewable energy production attempt. So, in the early 20th century, hydropower boom started, as you know, and continued till today. Within that period, hydroelectric power production increased 16% of the world's total. Starting from 80s, there were some changes in the electricity market. Those are privatization and liberalization. Those changes reformed the perspective of the market. Energy projects started to be considered as investment projects, and private sector got involved. This approach caused two changes in financing structure of the projects. Many more lenders appeared, and financial products became varied. However, financing started to be harder so that characteristics of the project. In this study, we aim to find out those characteristics and match them with these certain loan criteria in order to determine the most important ones. Let's talk about the project finance issue today. Project finance is the most favorite method for financing HEPPs. So this method includes a project company named SPV, sponsor and lenders basically. Among lenders and SPV, there is a credit agreement, as you see, and among sponsor and SPV, there is a contract of partnership agreement. So interested third parties can be included to the project by credit enhancement instruments. When sponsors contribute to the project with equity, lenders with debt. We constructed our study as 4 steps. In the first step, we searched 6 academic databases within a time interval 2010 and 2019. In the second step, we performed database search with the keyword of hydropower finance. But due to the insufficient number of studies, we included renewables finance and renewable energy finance keywords. After that, as a third step, we found 27 studies and 9 were excluded. Remaining 16 studies consist of factors complicating HEPP finance. In the last step, content analysis was performed on those 16 studies and total 12 factors are gathered. As is seen in the table, those factors can be listed as dependence on natural and political conditions, low equity return rates, technological, initial, transaction and production costs, construction risks and construction period, excess amount of externalities, market conditions, and long financing period. Studies that including those factors can be seen in the table. After that, loan criteria gathered from the literature and listed as risk coverages, low interest rates, long maturity, long grace period, and high leverage. Those criteria are expected to compensate the factors complicating HEPP finance. When we match those factors and criteria, we get the ranking among them. When doing this, all factors are accepted as equally important. After the matching, interest rate is determined as the most important factor for HEPP financing. So, long maturity loan products are evaluated as second degree important when high leverage is ranked as third. Existence of the risk coverages is ranked fourth. Lastly, long grace period is the least important factor for financing. As outcomes of this study, we found that low interest rate is the most important criteria for HEPP financing. Long maturity has the secondary importance. Short-term loans are easy to find. Please keep it in mind. Short-term loans are easy to find from the market. However, those increase refinancing risk. For example, Turkish market, we have seen the Turkish energy sector uh, have some problems about the loans today, especially commercial bank loans. So, grace period is the least important. All in all, ideal loan criteria can change according to project characteristic, but the initial results we found is all. Thanks for listening.